Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good morning. Welcome to Bazaar Morning Call. I'm Lata and with me, full house yet again. Anuj and Sonia are with us. The global markets have not really obliged us with too much of good news at this point in time, even if the Wall Street indices showed a bit of green. Asian markets, we started mixed, but now all markets are in the red. So clearly a bit of worry over there. Either it's global trade worries or it's growth worries, because all the metals, and Manisha will, later on in the morning tell us about it, copper, nickel, all metals in the Shanghai market are also trading lower. And as if all this is not enough, the one commodity we don't want to be trading higher is trading higher at this point in time. Crude has moved up by about 3% because of fall in US stockpiles and again problems over Iran. So the combo is not very good for an early morning trade in Mumbai. Good morning, Sonia.
Hi, good morning. And even the statements that came in from the RBI yesterday about more pain as far as NPAs are concerned, statements from Credit Suisse saying that, the emerging market sell-off continues, more than $30 billion over the past 5 months. I mean, all of this put together makes you a bit uncomfortable. Anuj, morning. What's the sense you're getting? So far, it's been a trading range for us, right? But do you get a sense that it could break either way? I mean, are there telltale signs of that?
Morning, Sonia. The issue here for our market is we have to discuss it in the context of what happened in 2017. I take the point that there's been a lot of sell-off from FIIs, but that was the case in 2017 as well. The market still went up. The problem is we're looking at the wrong index right now, which is the Nifty. Broader market is in a bear market, and I mean you're fooling yourself if you're thinking that we are still in a bull market correction over there. Now just look at Nifty over the last few days. The last many days, there's been a trend. If you see June 19th, it was down 89 points, 28th up 62 points, then down 31. One day up, one day down has continued for almost 7 or 8 days now. Net, we are down 30 points on the Nifty over a period of 7 days. And if you look at the series to date, start of the series was 10,736. We are at 10,769. Yesterday's low, in fact, was 10,732. In between, though, we have gone to 10,893. And we have gone to 10,550. So essentially a 300-point band. Within that's getting even narrower. Bank Nifty, of course, has been much broader in terms of range. It's been a 1,000-point range for the Bank Nifty. There also we are now moving, closer to the middle of the range. So that's interesting. But look at the mid-cap index. Start of the series, we were at 18,900. We are now at 18,400. So 500-point decline on the mid-cap index. Number of stocks at 52-week highs yesterday, 39. Number of stocks at 52-week low yesterday, 293. An average BSE stock is down 37 or 38%. Portfolios are down, they're bleeding. Again, if you invested at the start of 2018, in the context of, starting from 2017, perhaps you are still in the green. So short point here on index, respect the boundaries. Yeah. Yesterday also, in last hour, if you sold that spike, you would have made money. And if you bought the dip, you make money. So do that. Your markers are very clear, 10,900 on the way up, 10,650 on the way down. Core portfolio of 8 to 10 stocks this year is going to be the way. Those stocks will keep getting more expensive. And you'll keep, look at, for example, a stock like Tata Motors. It's taken 2 days for Tata Motors to undo 1 month of work. This will happen this year. You'll see these kind of moves. The expensive stocks will keep getting more expensive, and the value stocks will keep eroding more and more value for you. And 8 to 10 stocks core portfolio. Capital preservation this year is key because you are in a tough year globally and locally as well.
I take your point about portfolios getting destroyed. I was looking at the, CNX 100, if you take that as the mid-cap index. At an index level, year-to-date, the fall is 12%. So it doesn't look like bear market. Shanghai, incidentally, is already lost 20% year-to-date. So it's already in a bear market, just to reiterate the Credit Suisse point in terms of, the foreign selling. But if you looked at in that 100 stocks, the top 25 stocks, all of them have lost 25 to 50% in India. So that's where the bear market is. In the top 50 of the CNX 100.
And yesterday, which stock made 52-week low? Motherson Sumi, for example.
Exactly.
The bluest of blue chips in the broader market. Ashok Leyland has corrected about 20-25%. And index is masking a lot of things. For index, and the Bank Nifty, for example, is the most lopsided index that we have. It's HDFC Bank plus others. Just two stocks move and the index moves up. So that is not really telling you the true picture right now.
Okay, guys, but all is not lost, right? I mean, Argentina has kept their World Cup hopes alive, and finally Messi scored that goal. So I guess
Messi scored the goal, but really, I think they owe it to Rojo, because he literally carried the team, and Messi was so relieved, and Rojo carried Messi all the way after the match, and Maradona's reaction yesterday was something else.
That was, I think, the highlight of the game last evening, right? Maradona's reaction. So guys, forgive us if you're looking a bit groggy. You know what we did last evening. But let's take a look at what our wise experts have to say as we head into trade this morning. Sakti Siva of Credit Suisse, we were talking about that note. Net foreign selling of $32 billion over the last 5 months is what we've seen. We see that net foreign selling in emerging Asia, ex-China, ex-Malaysia, has now dropped to minus 0.5% of the market capitalization. She says this makes the current episode the third biggest in terms of capitulation, and it is fast approaching the 0.6% that was seen in February 2016 episode. The biggest episode, though, was in 2008. She adds that while foreign investor capitulation supports a bottoming in the market, the current price to book of 1.63 times is still some distance from the prior lows of 1.28 times in Feb 2016.
Well, a short point is there is a lot of foreign selling, no taking away from that. Now for some money market views, Pramit Rao of Veracity says strength in the dollar as well as weakness in domestic equity markets will keep the rupee under pressure. He expects the spot USD INR pair to trade in a range of 68, 68.50. Actually, yesterday, the rupee ended at its lowest level since lowest level in June. 68.24, and today it has a double whammy. It has higher crude prices and a strong return.
Okay, well, on the bond market, Dhaval Dalal of Edelweiss says that the bond market is showing some early signs of stability in June, with corporate, government and state development loan bond yields remaining range-bound and attracting value buyers at current levels amidst declining selling pressures. He remains constructive and expects the 10-year benchmark bond yield to remain in a range of 7.75 to 7.95% in the near term.
Okay, over to Mangalam then for the world view.
A rather feeble cues coming in from the world. In the US, well, we did see a bit of recovery, but trade war concerns still continue to linger. There was mild recovery post the recent decline that we saw on Monday's trading session, and yesterday we saw a bit of recovery from there. The stock that was on everyone's radar was General Electric, spent its first day outside of the Dow Jones index in nearly a century and spent it well, the biggest gain posted in the last 3 years. Crude prices, they've spiked, you've been talking about it, and now they stand at around 76.5, the Brent prices that is. That's after the US State Department has asked the companies to cut Iran imports to zero by November. European markets, they opened in the green, but then most of those gains were sold into, so red on the CAC as well as the DAX. If you take a look at the emerging market space, the Brazilian index, that one has been outperforming for the last 2 trading sessions, trying to unwind the underperformance that it saw in the previous week and the previous month. As far as the Asian markets are concerned, most of them are lower. The Shanghai as well as the Hang Seng indices, which are in bear market, opened to the green, that was sold into. The SGX Nifty indicates a flattish start around that 10,750 mark.
Okay, thank you very much, Mangalam, for putting all that on the table. And global cues are going to be important now, especially because it worries me that all the metals trading in Shanghai also are in the red today. So a bit of a problem as far as risk appetite is concerned. But let's get someone who will better analyze all this for the medium term and the long term, and a very keen India observer, Teresa Bagder, the co-founder and CEO of Kartika Management, who manages over $3 billion overall, of which $1 billion plus resides in the India portfolio, joins us now. Teresa, good morning, and thank you very much indeed for joining us this morning.
Well, thank you for having me.
Well, we have seen, the Shanghai market already go into a bear market year to date to below 10, losing 20% in 2018. What's your sense about India? We have so far found support for the Nifty at about 10,700. Do you think that there is enough for the index to plumb much lower this year?
Well, I think that India does have aspects of a safe haven, if you will, from the trade turmoil that China is going through. But India has a way of creating some self-inflicted wounds along the way. I like the medium-term cyclical story in India, and having a very big domestic market is very positive. But then we have to go through things like the long-term capital gains tax and the SEBI regulations on mutual funds, which have decimated the mid-cap space. So there's always something boiling in India. I guess, and now we have the corporate governance issues at not only the PSU banks, but the private banks.
Okay, so
that's a neat summary of our problems, I must say.
So what would you do now as an investor? I mean, for the rest of the year, how do the markets stack up, and what's your favorite market to invest into?
Well, you know, I think we still like where our portfolio is, even though this has been one of the craziest quarters that we've really ever experienced. The news flow has just been torrential. But in India, for example, speaking of the banks, we have seen high-quality governance banks like HDFC and RBL, which is in our portfolio, break away from ICICI, Access Bank, and those that are having corporate governance problems, either because there's a scandal or there's no succession planning, which is a real failure of corporate governance. So we still like that. As you know, famously, we're in a very expensive company in India called Page. And we've just done an analysis of Page because a lot of our investors say, how can you be in a company with 50, 60 times PE? So we used a Modigliani-Miller intrinsic value formula for that very expensive company. And when you look at it, in terms of its ability to reinvest at high ROICs over a long period of competitive advantage, which is what you get when you put things into this model. Those are the kinds of companies that get favored. And the intrinsic value, when you look at what's called commodity value and franchise value, according to Modigliani and Miller, you get a stock which, believe it or not, hold on to your seatbelts, could be valued as much as 90 times PE. So we do have to look at new ways of looking at companies in some of our India names. But it's still a name we like very much. So we are, strangely enough, even though India has faced depreciation and nervousness about elections, it still is somewhat insulated from the trade turmoil.
In fact, Teresa, good morning. I was talking to someone. He said this year you'll have to sort of, proof your portfolio from politics. And looking at your portfolio, most of the stocks are at lifetime highs. So that way, it's been remarkable for you. You spoke about Page Industries, but RBL Bank, Chola Mandalam, Marico, Eicher Motors, all doing well. And top 5 holdings, 42% of your portfolio is in top 5 holdings. You think it's going to be that kind of a year in India where you'll keep adding to these stocks only on dips, even though they look expensive?
Well, actually, we are, even though we have quite a concentration in India, our concentration has actually gone down a little bit, and we're a little bit more diversified. So we are in Brazil, for example, and I think right before I came on, they talked about Brazil climbing out in the last couple of days. Really, the last month has been not only the perfect storm for Brazil, but maybe the pluperfect storm. There weren't just 3 pieces of bad news, but about 5 pieces of bad news for Brazil this month, and or the last 4 weeks, I should say. And so I think there is room for Brazil to turn the corner, and probably a 60% chance of getting a new president that's at least a quasi-reformer, if not a complete reformer. They just need a few things that need to be done on the fiscal front because that's their vulnerability. But we love the management teams there. We love the quality of the assets there. We love the ability of these companies to get high returns on invested capital. And we love the fact that so many Brazilian companies have used a recession to make themselves much more productive.
Okay. Teresa, in that case, will you expand this list of 5? I mean, I still don't find Bajaj Finance or the Bajaj twins in that.
Well, we are somewhat constrained that we're only in small and mid cap, and so we're not going to be in every name. We do rotate very slowly. We usually have long-term relationships with the companies we're in. So right now, we have rotated a little bit from your list that you can't see there, but we are pretty happy with the portfolio globally that we have of about 22 stocks.
So you also have some of these rural-focused stocks on your list, names like Marico. What is your view on how that story will play out? Because it's been a sort of a 6-month to 1 year play out already. You think there's lots more to go for some of these rural themes?
Well, we saw this before in about 2010, where rural Indian GDP was outpacing urban Indian GDP. Those are anomalies. In general, over a long period of time, rural GDP does not or cannot outpace urban GDP. But in a run-up to election, when politicians like to, as my partner says, buy love, you then can see some distortions that lead to higher rural growth. But it's not something that I would expect. I'm looking for overall growth and productivity in India. I think the building the roads, railroads, getting some of that infrastructure in place will in fact lead to higher productivity in India. We are modestly hopeful that we're seeing signs of investment finally. I think I probably say that every time I come on, because India desperately needs the productivity. As you know, there are only 2 stools to potential growth.
Yes.
And one is demographics, which you have. And that's not, it's a problem only in finding people jobs, but it's not a problem in availability of workers. And the other, of course, is productivity. So I think that's really the key in India. And we're probably going to see, there's plenty of room for productivity growth in rural area India, but we will probably see productivity growth growing more in urban India over the next 3 to 5 years.
Yeah, that's an interesting point. The other stock which has made a lot of money for you has been Eicher Motors. But over the last 2 years or so, it's gone a bit sideways. You think it's now fully pricing in the big growth story, or is this just one of those phases, validates, and then will again sort of break out?
Well, I think it still has legs. I think that when their backlog got less impressive, investors turned off a little bit, but that's because they built new capacity. They also moved their engineering to the UK, and for the long run, I think that was probably a reasonable decision to make. And in the future, it really will depend on them being able to go from 600,000 to 700,000 to 800,000 bikes, and to also open up the export markets, not even dramatically, but just reasonably. They are kind of a cool brand outside India as well, because they're so niche. If they become a little more mainstream, we'll see what happens. But also the price point is very low internationally. So I think that they definitely could have some legs there, and they've got the capacity to continue producing at very good margins. I think that's really where they stand out.
Teresa, I'm really tantalized by the fact that you have changed your list a bit, and there are some more stocks which you haven't yet told us, which are not in the public domain. But would they be in the consumption space? I mean, the pizza guys have done exceptionally well year to date. So have the footwear guys. I mean, if it's Bata or Jubilant Food. So the new additions, would they be in consumption?
No, we don't have new additions. We just have one subtraction.
Oh, okay.
I'm sorry to disappoint. Sorry to disappoint.
Okay. Well, what about IT companies? That's the other segment that's, especially in the mid-cap space, you know, the way NIIT or Hexaware have done year to date, rising about between 25 and 50%. Is that a space that at least you will look at?
You know, we have looked at it in the past, and some of the teams there are very impressive. But the issue is, of course, they become more competitive with devaluation, and that's good as a hedge, but it also makes them a little bit volatile because they do better and worse depending on the currency. So while sometimes you might like the hedge, I think the real long-term issue is whether they can stay ahead of all of the developments that are coming out of Silicon Valley. They've got to be really top-notch on artificial intelligence, on big data, on data mining, and that's our concern, is how far how their product essentially gets commoditized, because it's very difficult to stay on the cutting edge.
It can't be a Page Industries for sure, yes.
Yeah. So you did say...
Yeah, no, that's the cutting edge of everything else. Artificial intelligence.
Okay, so you did say that you don't have any additions, but you do have one subtraction. What might that subtraction be?
You know, I have not talked to my compliance officer, so I'm not sure if I can say that. Much happier to talk to you about where the U.S. is going than which company in India.
We are coming. Okay, we are coming to where U.S. is going, but more importantly, for the next 12 months, we are going to be preoccupied with politics. Will you be?
Well, we're preoccupied by politics, both in the U.S. Because they press mentions of trade wars and trade tensions correlate to the poll numbers for the Republicans. Chances to do better in keeping the lower and upper houses of Congress in America. And so this is a winning campaign slogan for the Republican Party, the whole issue on the tariffs. And it has injected an enormous amount of uncertainty into emerging markets, into the U.S. dollar, and into the U.S. stock markets. But that is largely about politics. Then, of course, we are concerned about Indian politics. I think what's going to be important is that the signaling and the conversation around Indian politics, it needs to keep up with the developments, because right this moment, if they had an election and Modi did not win, was not prime minister again, the foreigners, I think, would flee India. However, if over the next 10 months or so, the conversation evolves and people are comfortable that there may be other candidates and that in the parliamentary system you might have other coalitions that are put together, and Modi may or may not be prime minister. If that's well signaled, I think it can be absorbed by the market. But certainly, if the election were held today and he didn't win, it would be a disaster for terms of the foreign investors.
So what are you forecasting in terms of emerging market moves for the rest of the year? I mean, we've seen a large amount of sell-off already. Given the context that we do have hurdles like higher crude, etc., do you see more money move out of emerging markets through the course of the year?
You know, I think a lot of it will have to do with those two things, so the price of oil and the price of the U.S. dollar. My own view is that the U.S. dollar is going to have to weaken over a medium term. Now, it could stay strong through the end of the summer, but I think the fundamentals for the dollar point to a weaker dollar. So in terms of the fundamentals, I would expect, and you know, currencies are very hard to forecast. And this one, of course, is even more complicated because of its role as a reserve currency. But my guess is the fundamentals of the dollar just cannot hold up for that long, so that maybe by the end of August or something, we'll see the dollar start to moderate. Then I think the huge question on oil is really, what is the Saudi capacity? The Saudis said at OPEC that they would produce another, that OPEC would produce another 1 million barrels of oil a day. The Saudi Arabia is right now at about 10.5 million barrels a day, and their theoretic maximum is 12 million. But if we've got close to 1 million, 900,000, basically coming offline because the administration in the U.S. today said that they were going to have very strict controls on the purchase of Iranian oil, including sanctioning any allies of the U.S. that would buy Iranian oil. God knows how this can't be leaky, but starting in the fall. And so that's a real blow. So the new 1 million barrels a day just barely makes up for 900,000 that could come offline in the fall. So it'll really be up to Saudi Arabia to go toward full capacity. And it's unclear how much CapEx and how much time Saudi Aramco needs to get up to that theoretic maximum. So the price of oil, I think, for this year, it still remains a wild card. Price of oil could stay roughly where it is, or go up a bit, or if there's any disruption, it could go up by a lot. I don't think there's a great chance of it falling dramatically, just because 2017 was the worst year on record, really, almost, for new exploration. So I think we'll see exploration in 2018 and 2019, but with these things going to take a while for supply and demand to equilibrate.
Okay. Teresa, how are you looking at the Indian interest rate scene? We have seen some sharp increases in yields. Does that alter the way you will be looking at stocks, because you have a bunch of NBFCs and you have a bank as well? Will it influence your stock picking?
We're okay. I mean, when interest rates go up moderately, that's actually good for financial institutions. So I think that's fine. And our other companies have very clean balance sheets, so they're not really leveraged very much. So it should be, for our portfolio, reasonably fine to have a moderate rise in interest rates.
Okay, Teresa, it was always a pleasure speaking with you, and I understand that you love yoga, Indian food and mehendi, so I hope you come to Mumbai sometime. We can treat you to all of that and
Thank
more.
you so much for having me.
Thanks so much for joining us. All right, that's a big FII voice on India, on the globe, and of course, on a lot of stocks that they hold, like Page Industries. We'll take a short break on that note. We'll come back with CNBC TV18's top 10 list of stocks to watch.